If you're in mortgage forbearance or thinking about using it, you might be wondering what happens next. Can I still refinance or buy a home in the future? The good news, yes, you can. But there are a few key things that you need to know to get back on track financially and set yourself up for success. Today, I'm breaking down how mortgage forbearance works, what options you have, and what lenders will look for when you're ready to refinance or buy again. So let's get into it. First, let's clear something up. Forbearance is not the same as loan forgiveness. So, forbearance allows you to temporarily pause or reduce your mortgage payments if you're facing financial hardship. It does not erase your debt. You do still have to repay those missed payments. So, the key takeaway here is if you truly need forbearance, use it. But if you can afford your payment, it's best to keep making them to avoid complications later. Many homeowners worry that forbearance will prevent them from getting a new loan. And the truth is, it's possible to refinance or purchase a home after forbearance, but there are rules. So, under the CARES Act for COVID related forbearance, late payments weren't reported to credit bureaus. So, lenders will want to see that you've resumed making on time payments before approving a new loan. And most loan programs require at least 3 consecutive on time payments after a forbearance. The key takeaway here is if you plan to refinance or buy, start making on time mortgage payments ASAP in order to meet lender requirements. How you handle your missed payments depends on your loan type and lender. So here's some common options. So a loan modification, that's where the lender may add the missed payments on your loan balance to extend your loan term in order to lower your payments. Second mortgages for missed payments. So some lenders place a second mortgage on the home for the amount owed, which you'll repay separately. A lump sum or increased monthly payments. So some lenders may require you to pay back everything at once or increase your monthly payments until the missed payments are caught up. Before exiting forbearance, talk to your lender to understand your repayment options. Once forbearance ends, it's time to regain financial stability. Here's how to do it. Prioritize your mortgage first. So if you have multiple bills, focus on keeping your housing secure before tackling other expenses. Rebuild your savings. So if possible, set aside money for future emergencies to avoid needing forbearance again. Make on-time payments. So your lender will check your recent payment history when you apply for a new loan. So the key takeaway here is staying current on your mortgage after forbearance is the fastest way to qualify for refinancing or buying again. So if you're self-employed, be prepared for extra lender scrutiny. So lenders will look at income consistency. Even well-established businesses may have income fluctuations that impact loan approval. So be ready to provide additional documentation like tax returns and bank statements to prove steady income. Pro tip, if your income has been unstable, waiting until your business revenue is consistent again may improve your loan approval chances. So if you're in forbearance and want to refinance or buy a home in the near future, here's what to do next. Talk to your lender. Ask what repayment options are available after forbearance. Make at least 3 on-time mortgage payments. So this is key for refinancing or getting approved for a new home loan. Get a financial plan in place. Prioritize mortgage payments and rebuild savings for future stability. Have questions about mortgage forbearance and your next steps? Book a call with me today. I'll walk you through your options and help you get back on track for refinancing or home ownership. And if you found this helpful, hit that subscribe button for more mortgage insights and financial strategies. Click on the link below. Let's schedule a chat and let's make sure you're set up for success.